Great. Um, Thank you so much for joining the Deal Street Asia panel on the Valley Side view of Asia's technology ecosystem. We have a great panel here today. Our panelists are Larry Lee, who's managing partner at AMINO Capital, SC Moatti, founder of Mighty Capital and Products That Count, and Arjun Sethi, co-founder and partner of Tribe Capital. I'm Vedica Kant. I work with the Boston Consulting Group's private equity practice, and I'm really looking forward to hearing from our panelists about how they view the Asian ecosystem, which of the sub-ecosystems, so to speak, they're most excited about, and how the Valley views startups in Asia, and how that view might be changing, especially with the recent elections and potential changes in geopolitics, which, as we've seen, have played an important role in both in tech conversations and politics recently. I'd like to basically start off, though, by asking each of our panelists about their own personal connection to Asia. What is it personally or professionally that has interested them or connected them to Asia? Some of them, of course, have a personal connection to the region. And also professionally, would like to ask them about which ecosystems they perhaps pay the most attention to, which they're most excited about. Again, I'm going by the panelists as they're shown on my screen. So I'll start with Larry first, and then move to SC and then Arjun.
Yes.
Larry, would be great to get your take.
Yeah, thank you. It's an honor to be on the panel, and Deal Street Asia is a great panel, a great platform for us to communicate. Yes, I was born in China, and I graduated from Tsinghua University, and then I came to US in 1990. That's about 30 years ago. During these 30 years, I did a lot of things, including as an entrepreneur, later started a fund. As a fund, we invested in, as a first check, we invest in Zoom, which became a household name. My connection with Asia is very close because my parents are still living in China. We invest about 200 companies in Silicon Valley, but 1/3 of them are actually with Asian origins. Some of them actually moved their headquarters to China, to India, to Singapore. So we have a lot of portfolio companies in Asia right now. During this time, we also started a subsidiary in China, which is investing in RMB separately, mostly in China right now. So I'm traveling between US and China every 2 months until the pandemic hit. So it's becoming a different life right now. But I'm very passionate about the investment and the business opportunities in Asia, especially recently with RCEP, the new trade pact, will have a huge impact in the geopolitics and the global trade. With these changes, there's more opportunities coming. So I'm very excited with the opportunity in Asia, and today I'm very excited to communicate with all of you. This is a good opportunity to talk. Thank you.
Yeah, great. Interestingly, just a side segue before we move to SC, interestingly, India decided not to join the RCEP, and it's quite controversial in India because there is this broader discussion, which I think we'll come back to, about whether we are seeing countries turn more inwards and what that impact might be on how that might impact the ecosystem. But SC, I'll pass it on to you. It would be great to hear from you.
Yes, absolutely. So I was born in Europe. I was born in Paris, not in Asia. But personal connection, I practiced martial arts for over a decade. And so that's sort of how I fell in love, particularly with Japan. And then in the course of my career, I spent a dozen years building products and companies. And so I had several opportunities, whether while working on my own businesses or working for Nokia or Facebook, to go to Asia, give talks. And I was really blown away. China in particular, I expected a country that was really heavy in manufacturing, and I found a country that basically went from manufacturing, leapfrogged over software into like AI, blockchain, with partnerships really solid, right? Like universities, governments, financial institutions, completely creating a rock solid long-term innovation ecosystem. So while we don't at this point invest directly in Asia through Mighty Capital, we have investors. Some of the investors in our fund are from Asia, and they help us introduce our portfolio companies to expand their markets. So for example, we're investors in Mission Bio. They have a very large distribution partnership in China. We're also investors in Amplitude and Airbnb, and they are now at a stage where they have business operations in Asia. So that's the connection there.
That's great. Arjun, you next, since we're going in this kind of.
Yeah. So for Tribe specifically, we are we're a firm of mostly focused on sort of sector, stage, and region agnostic. Some of our efforts have been placed in certain regions within Southeast Asia, so India more specifically, but we've been taking a look at Malaysia, Indonesia, Singapore, and also parts of the Middle East. Even though people don't call it Asia, there's a lot of tie-ins in terms of the way in which some of the economy works, especially with India. I think we have naturally shied away from China and Japan. Two reasons. China specifically, I think we have an issue with some of the unfair trade practices and the way in which the ecosystem works for outside companies working within China. That said, we're also just not very close to the Chinese ecosystem, even though some of our partners were born there. I lived there for about 1.5 years in Chengdu. Our partner, Ted, had lived in Japan. So we have a lot of ties with different parts of the Asian ecosystem and Southeast Asia. And we have, I'd say, about 1/4 of our LP base is from the region as well, including China. The aspect of how we view Asia as a whole is two parts. There's a section of the economy that's much more inward, where I'd say that they've had to focus on being vertically integrated by creating their companies. So China is sort of that example where they had to create their own stack at the infrastructure layer, they had to create their own stack at the application layer, and had to create their own ecosystem. Part of that, I would say, is political. Part of that is just the way in which the ecosystem emerged. And then I would say the rest of the ecosystem had to leapfrog because they didn't have infrastructure. So India is a great example where they, forced to move in that direction. The application has been being built. Same thing with other parts of Southeast Asia, with Malaysia and Indonesia. And the way in which we've invested so far is we've taken just larger concentrated bets. So the one company that we've announced so far is a company called ShipRocket that works on first mile and last mile delivery, all through aggregating software for their merchants. So you can think of it as the same area that Shopify focuses on, North America with small to medium businesses. So I think we have focused on industries where we feel like it's the heartbeat of the economy, where there's a lot of small and medium and mid-market businesses that get empowered by digital. That's today, and I think moving forward, we'll look in a different way.
Thank you so much. I think all three of you, to some extent, touched on the fact that you all have Asian investors, even though you might not necessarily currently be investing immediately in Asia or have operations there. One of the questions that I did have, and I'm really curious about this, is how you've seen your interactions with Asian investors and LPs in particular perhaps change over the last few years, and what kind of trends are you seeing when it does come to Asian investors who are interested in investing in Silicon Valley? The reason I ask this, of course, is we had till a couple of years ago, the largest investor in the Silicon Valley ecosystem was basically SoftBank, which is where I spent a bit of time, where the core LP base was, from the Middle East. We have a lot of Chinese investors, a lot of capital that is based in Asia that is looking for returns on capital, and the US market provides that. But at the same time, you do have a bit of a tussle geopolitically now with the US and China in particular, but also concerns, say in the case of Saudi, with some of the internal politics and whether startups should be taking that money. Would just be curious as to get your ringside view of how those interactions are changing. And Arjun, perhaps we'll start with you and move in the other direction this time. Arjun to Sethi and Larry, just thoughts there.
Yeah, sure. So I think if you take a step back and think about the investing and LP ecosystem from that region, I'll take India out for a second because they've historically not invested outside of India as a whole, except for a few folks. And I think what's most important is what they used to invest in. So they used to invest in traditionally I'd call buckets of bonds, fixed income, and real estate. Real estate being sort of the shiny object for the last 30 years, and that's been across the board. And I think that was considered like the safe and safety asset. So US was kind of that natural segue into, okay, we'll start there. And I think what you've seen over the last maybe 10 to 15 years is with interest rates starting to come down, yields becoming lower in certain areas, they've been forced to invest into the equities ecosystem. Now that's a combination of private and public. So on the public side, I think we've all seen that where with the beginning of the pandemic and midway, that there was acceleration of businesses that look like the transformation of retail to digital and anything that's moving forward in a post-pandemic world. And then on the private side, you're starting to see, for example, Japan, where their pension funds or their central bank is moving and shifting a certain amount of their assets from traditional safety assets to alternative. When the Central Bank of Japan even changes 5%, you're talking about hundreds of billions of dollars moving over into the private and public equities market. That changes the way in which the whole market sort of evolves, right? And so you think about all parts of Asia starting to do the same thing because of those rates. So I think about the macro first, and then on the micro side, that's when all the conversations start happening around where should we invest, what's the tech area that we should sort of spend time in. What are the markets that we should go towards? And I think, first and foremost, they just think of US as like the safety asset and the growth market. And then they shift back to primarily led from our conversations with them is, yeah, US is a great area, but you're starting to see this shift in emerging markets all over the world, primarily in Asia. Here's where they are in their life cycle. And so a lot of the conversations we've had is kind of the recycling and turnaround of capital to say, here's where we are experts in investing. Here's how we're spending time. And here's the area and asset class of how we think we could grow the capital and invest in the company's longer term life cycles where they might not be a couple of years, but they are 8, 10, 15-year bets, which is something that they are slowly getting educated on in some of these regions.
That's super interesting. Sethi, I think you're on mute.
Sorry. At the geopolitical level, I think the relationship between US and China has not evolved that much since the Kissinger-Nixon era. There's basically a recognition that they need to be trade partners, they need to be pragmatic, and sometimes there's escalation and signaling, and we've seen a lot of that in the last few years. But the reality is, it's a kind of a frenemy relationship, and it has to stay this way because it's better for both countries and it's better for the world. So I'm not seeing, a massive change in the next few years in that sort of long-term geopolitical direction. At a micro level, however, I'm seeing a lot of changes. I'm seeing that, many deals fall through when there's, investors from both sides of the Pacific. I'm seeing that it's much harder for portfolio companies and for businesses in general to expand over to Asia. They have to do it through partnerships, whether it's distribution partnership, manufacturing partnership. Many of them are creating redundancies for their production facilities, that we are one in Asia, one outside of Asia. And so there's definitely, a lot of caution. I also was until recently on the board of Opera Software, the mobile browser, who was sold to a Chinese consortium, and we triggered, CFIUS, the Asian version of the Chinese version of CFIUS and the European version of CFIUS, and had to go through like a lot of oversight in order for that, $1.2 billion transaction to go through. So definitely on a micro level, a lot of nervousness and lack of trust.
Yeah, and Larry, it would be great to get your take on it. Does that micro level lack of trust resonate with you? And how has it shifted over like your 30 years in the US and working across both sides of the Pacific?
Yeah, it's changed a lot. So the saga of TikTok in US reflected the real relation changes between US and China. So we experienced a similar thing because we have a lot of partners in China, and they were here almost on a weekly basis before. But after the trade war started, and the things changed dramatically. Fortunately, our investment or our LP bases are pretty diverse. So we have quite a few LPs in US, and we can continue to work with them to invest in Silicon Valley and as well as in like Europe. At the same time, we do have quite a few LPs who are based in China and like to stay in China. They want to keep the money in China for now. So because of this reason, we started a R&D fund in China where we invest locally in Chinese market. So for us, we have to adhere, we have to basically follow all the laws and rules locally when we do business in US. But when we do business in China, we follow the law and the rules there. That's for the time being, it worked out pretty well. At the same time, we do feel that as an entrepreneur myself and most of the partners we have, we are entrepreneur by heart. So we believe that entrepreneurship is universal. No matter what kind of system the country is, promoting entrepreneurship make people more self-reliant and make people have a better life, and they're less dependent on the other parties, on the other people. So that's good for the society. So we always promote entrepreneurship. But we do see a lot of changes. I think we see the Asian people are rising dramatically with the economic strength. Recently, that's reflected actually partially in US as well, with the election of Biden and Kamala Harris speak loudly about the importance about Asia, about the Asian descendant in the US as well. So as an Asian descendant, I'm so proud that Kamala Harris become a vice president-elect. I'm also very happy with all the people here from India as well. So, but speaking of the changes, with reason the RCEP PAC, and there will be even more changes. And it does give us a lot more opportunities to invest as well, particularly in China, because of the trade relationship. China has to build a unique ecosystem. So there are some industries that become a very, before it was not competitive to US companies. There's no chance for them to compete or to survive. But now some companies, they focus on the Chinese market and they have an opportunity to survive, even to thrive. But that's beyond the politics. I don't want to get into politics, but it does have an opportunity. Yeah. We also see the rise in India. We also invest quite a few startups in India because we feel India has a huge potential, and because of the political system, the geopolitical area, and all kind of reasons. I think India is rising quickly. We also see the opportunities in Vietnam, where the system just gets started to reform from the total central government control system to a more economic reform. This is like the beginning of China's reform 40 years ago. So we see huge opportunities in Vietnam and other Asian countries as well. So it's a huge opportunity, and we are very excited. We are getting ready to deploy more capitals in Asia.
That gives me a really good segue to a question that I had, and I'll come back to you on this, but a broader question that I had, which is about the role that Chinese capital has actually played in the Asian ecosystem. I know that, you know, Indian startups, for example, have received a lot of Chinese funding. Southeast Asian startups have received a lot of Chinese funding, but even in Asia, there is now a slight tension about that kind of Chinese investment coming in. One follow-up for you is whether you see some of that tension playing out in your Asian investments. So, for example, I know India has made it more difficult for companies to accept Chinese money. That was one question for you, and I'll have a follow-up for Arjun after that. But that's my question to you, Larry. Have you seen some of that, like some of those challenges playing out?
Yeah, I certainly see that in the media, and also personally, I see quite a few stories about the tension with all the geopolitics happening. But there are two types of capitals from China. One is from government, right? They have a lot of resources as the type of government they have there. It's a lot of money, a lot of resources from government. Those capital, when they invest, I think they have a national strategic plan in mind, and they have certain requirement and certain kind of a constraint attached to those investments. So some government in Asia has certain reservations about this type of investment in recent years. But there are other type of capital as well. There are a lot of entrepreneurs, and they make their own money, and they want to diversify their investment, and they want to take, they don't want to miss the opportunities in other Asian countries. So they are investing on their free will without any political or other control or agenda. So for those type of capitals, I think they are still available, and they are relatively more friendly considered by many other entrepreneurs. So those capital is definitely available, and there's a desire for those capital to be in different areas, just to diversify their investment and their wealth. So I want to see, I can see the both sides of the coin. It depends on how you utilize this coin.
Yeah, I think unfortunately many governments don't necessarily see that distinction between Chinese government capital and personal investors. Arjun, that's a good segue for me to ask you a question. You know, you mentioned that you're investing quite a bit in Malaysia, Indonesia, India as well. Do you see that kind of withdrawal of Chinese capital, or not withdrawal, some of that distance from Chinese capital playing out? And do you see that opening up space for more US investors to go and invest in those economies, which they might have traditionally been slightly reluctant to do?
Yeah, so the reality is that I'd credit probably the Chinese ecosystem and capital, and I'd include Hong Kong into this as well, into investing into the area and sector more aggressively than other economies or ecosystem. That said, if you go back 30 years, I'm going to start it off with this thesis that, you know, with the opening up, the thesis that China would become more open, India would leapfrog, and the other Asian economies during the internet era would become more like the United States. That didn't happen, where the Chinese ecosystem became more inward and created their own ecosystem. India just didn't get their foundation started, and then the other South Asian ecosystem just weren't able to get past a certain life cycle. So I think what you ended up happening is that you had an influx of US capital and European capital, then it shifted away. And then you had the Chinese and Japanese ecosystems trying to support their local ecosystem. And then it started, I'd say, proliferating. in India specifically, the first folks that started investing there wasn't necessarily financial capital. I'd say it's more strategic. So the likes of Alibaba, Baidu, Tencent, et cetera, had sort of focused on what they thought was the most important for them. So e-commerce, communications, infrastructure. And then I think, most recently with Reliance and the focus more towards getting everyone connected across tier 1, tier 2, tier 3 cities, you've seen much more investments now happening from, I'd say, strategics and corporates coming into India to figuring out what's the right way to support, at least at a foundational level, connection, and then ecosystems and I'd say economies on top of it. I wouldn't necessarily say that we've seen that there are companies less willing to take capital from anyone. I think at the end of the day, capital is capital. But then you look at what's the strategic value of that capital coming in and what's the value proposition that you get. Because of the trade practices and or what's deemed as unfair for a multitude of folks, I think China has become that target with India specifically, with the United States, Australia, et cetera, where there is more of a take versus a give with the capital and the sort of the manifestations of the governance that comes around that capital, where I think you've seen this pullback. It doesn't necessarily mean it's right or wrong. It's just kind of what has started to happen. I think the good thing has been that a lot of the companies, what I call the wave 1 to wave 2 to wave 3 of the Indian ecosystem, Indonesia included, is that they started focusing on their unit economics. And I think it's something that people don't really talk about, is that there was this influx of capital and ideas. And the second wave has been like, great, if that capital gets lost, regardless of who comes in to help, you need to start focusing on sort of self-sustenance and the companies to be not necessarily profitable, but at a place where the unit economics start working. And I think what you've seen with that is the companies starting to think about liquidity, public markets, and not an aversion, but more of a regression towards what do these companies look like to support the local ecosystem and growth, and then how do they look outside the Indian ecosystem, going into the United States from software businesses, going into Europe and other regions. So it's kind of like companies based in Asia expanding outside of their local home countries.
Yeah, that's something I definitely wanted to speak to the panel about, because we've actually seen, relatively speaking, fewer brands from Asia so far be successful in expanding outside their home geographies. Sethi, this was a question that I had for you specifically, given your work with products like Kant as well. Are there any great products that like really jump out to you that from Asia that has recently got you very excited? And from a product perspective, how do you interact with product managers in Asia? Is that something you're looking to do more of? Just curious to get your thoughts there.
Yeah, that's a great question. And obviously that kind of dynamic drives so much of the innovation and the funding. So I'll share a few things. One is when I look at what's happening on the ground, where I see interest, like we constantly from basically every place in the world get requests to open a local chapter or, focus, feature product leaders from, different regions and different industry. The two hubs in Asia that are most active or most, asking for products that count to expand the most are Hong Kong and Singapore. We hear here and there from other places, but really it's these two hubs. And so we've explored a couple of times before COVID, what would it take to expand? We've had opportunity to discuss partnerships with large corporations to really foster that product culture, and I see some momentum. I see momentum similar, if I compare to the US, to what's happening maybe in Seattle or in Austin. And so a small, just around critical mass group of people who have amazing technical skills, that's no question, a lot of money, but really the missing link is the entrepreneurial and angel investing mindset, right? To create that like early stage dynamic. And for the reason Arjun was talking about earlier, which is that most of these investors are used to real estate, and so for them to transition to a venture capital mindset and innovation mindset, it takes a couple of successes to get there. So that's the first thing on sort of like the bottoms up. Top down, the other thing I see is also just I would say maybe different behaviors. When I think about how people search, right, how we look for things, right, it used to be before, with Google we think this way, with WeChat we think this way, right, we're talking to our phone. Prior to that we were searching like this, where is my phone, like physically searching. And I think there's a really fundamental different behavior, which also explains why it's so hard for Chinese leaders to expand in the US and vice versa. For a while, products like Kant had a partnership with WeChat, which I kept telling our Silicon Valley audience, this is the Facebook of China, right? At the time that Facebook was like this amazing, super popular thing, but there was really a challenge in adoption because people weren't used to the behaviors that are so common in Asia. So I think that this product culture, there's also a way that it's local. And by the way, we see that in the US too. When we look at the different hubs we have, in San Francisco, it's all about the consumer tech. In Seattle, people really want to talk about the future and augmented reality, virtual reality, very, very sort of like far out. And every city sort of has its own specificity. In Asia, I see the same thing. And again, the biggest impediment to that product culture right now is the lack of an angel investing, being okay with failing ecosystem, even at the product level.
Yeah, Arjun, just wanted to get you in there, since you mentioned, some of you've seen in India, and we've definitely seen this trend of some of these SaaS companies trying to expand outward with the idea that perhaps with SaaS you don't have, especially B2B SaaS, you don't have to necessarily deal with some of these consumer behavior challenges. How would you respond to what SC is saying? Does that chime with your experience? And one question that I always have is like, what is it about European market or the US market in particular that makes it so difficult for these companies to crack it? Whereas you will still have the Ubers and the Amazons that are able to go and, see India as a big market and an opportunity that they can attack and get a foothold there, even if they have local competitors. So thoughts there would be good.
But I think at the heart of any of this is the regions are just different. And so you have to think about it differently. When you're building product, it's not just about localization and changing the language. It's about what are the nuances of how people interact there. So what SC was talking about, it's absolutely true, right? Where, in China more specifically, they didn't have as many products that were fragmented, in an ecosystem where you'd use multiple services. You use one service for almost everything, and I'd argue that's not just how the ecosystem evolved. That's how they culturally adopted everything as well, right? From a monetary system to payments to just the overall ecosystem of the economy. Like that's how even the government is set up, right? From a centralized perspective. So that's more natural. Whereas in the United States, it's the exact opposite. We're highly fragmented, right? You have city, state, local, and then federal. And then if you really think about it, we're all our own countries in our own certain way, right? Where California as its own economy is very different than New York as its own economy. So you kind of take that framework and you spread it out and say, okay, well, how does the rest of the world work? And where do they fit in that ecosystem, or on what side do they more align with? So if you look at India, again, highly fragmented, even though you think about India, multiple languages, although English is kind of like the common way of communicating on the backside of a piece of paper in their education system. but they have their sub-region, sector regions, government, province related style mechanisms for not just political but economic, which becomes a pretty hard way to do business, not just internationally but domestically. And so you take that and say, okay, now let me go to each country and how do you build product and service and how do you expand that? I'd say on the consumer side, if you just think about general software and how software is being proliferated all over the world and how people use that workflow, it's not just that B2B is easier. I'd actually say it's just as hard, right? Because you have consumers that are interacting with their B2B workflow and how they work within their organizations in the same way. So they kind of fit the same paradigm, right? If you think about Slack, if you think about Zoom, if you think about Box, if you think about any invoicing software, they're tuned to their local economy. That's why it works in their local economy. And then when you move it forward and you say, okay, where else can you expand it? It becomes harder because their businesses don't work that way. So for in particular, if you look at the SaaS businesses that have come out from India, they're either focused on Western markets or they're focused inward. They don't actually they don't actually focus on the ecosystem across the board. They usually kind of think about which industry do I go after, or payments, or fintech of everything. It's really pretty localized in the beginning, and then they figure out how much they can expand out. And then there's just a natural deceleration of what they can and cannot do. So the companies that are based in Asia, start in Asia, they naturally lend themselves to other countries that are more akin to their workflow. So in India, if you think about social shopping, e-commerce, where are the other areas that are similar to them? Well, it's Egypt, it's Indonesia, it's parts of the Middle East, because there's natural ties there. China looks at more countries that are more akin to them. So Vietnam becomes that more natural center. So you kind of think of it that way. United States, where do they go? They go to Europe, they go to India, they go to Japan. Latin American companies, where do they go? They kind of stay within Latin America, South America. And Europe, I won't talk too much about them because I just think of them as stagnant economy as a whole. So they stay very inward and you don't have a lot. And so I'd say that, just to echo what Sethi said, there are so many different microcosms of how they all interact. And I think it ends up being culturally how they've adopted to technology and how they use it. And that extends into from consumer to B2B.
Yeah, if I can add a couple more things, completely agree with what Arjun is saying. In fact, what we see at Products That Count is a lot of teams are now becoming global product teams. So they have like lots of communication, time zone challenges, but they create product teams that are local. So there's an Asia product team, there's a US product team, there's a Europe product team, because these are different behaviors and they are best understood at a local level. And that's a relatively new trend. I would say that's maybe like a couple years old. The other thing is, I think there's a really kind of critical axis to the way US, Europe, Asia behaves, which is, do you rely more on data or do you rely more on relationships? And I would say the US is, at the kind of the extreme, relying more on data. And most of the, the unicorns that are created and that come out of the US, that's sort of how they create a competitive advantage. It's like they use data to generate some insights that gives them an edge. And as there's more data, there's more insights, it creates a moat. I would say in Asia, it's probably on the other end of the spectrum. The expertise comes from the connections you have to a subject matter expert, and this sort of very interconnected network that you see a lot in WeChat, right? These channels and so on. That's the competitive advantage. The more expert you have, the more you attract that long tail, the greater your competitive advantage. And then Europe is sort of like neither nor, right? And that's why there's hardly any. I mean, there are a couple, right, unicorns coming out of Europe. And so the strategy that Europe adopts is like, oh, I'm going to control my data so I don't get, under the spell, under the domination of the US. And I'm, setting barriers in my relationships so I don't get too much influence from China. But if you look at the number of unicorns in the US versus in Asia, it's actually about equal, like half of them I'm talking about decacorns, right? So really big company. Half of them are from the US, half of them are from China. So there's no kind of right or wrong answer. Like both of them are valid.
One of the points you raised right now, and I think it speaks to our time, is just given COVID, we are moving to more distributed teams. We are moving to more remote work. How do you see that impacting product cultures beyond just having these kind of local product teams? What kind of impact do you see that having longer term? And that's a question for all the panelists, really. Yeah.
Okay.
And expanding on that, please.
Yeah.
Yeah, I think.
Go for it, Larry. I'll go after.
Yeah, I think with the COVID-19 situation right now, people are so much get used to video conferencing. So people in many areas get actually more productive. So we have a team in China, in the US. It used to be I travel every other month to China. Right now we are online all the time. Although there's a time zone difference, but there are about three hours overlap. So actually I'm seeing my team in China every day, and we work much more closely. And so that's something we didn't expect before. Now we are all in the same distance because our team in US, they're also doing the video conferencing anyway. So it turned out to be the team becoming much more coherent because we all have similar distance online. There's no small TikTok and no office politics. So it turned out to be better. It's very perfect. Yeah, and sorry, Larry, please go ahead.
Sorry.
Yeah. So as to the just follow up on Arjun's point that the investment thesis is changing a lot lately, especially with the SaaS model, which more localized, right? There are different rules. So in China, there are a lot of companies doing SaaS, and they're doing very well within China. But for those companies to go out of China, it's very difficult because of the regulation, the business rules built inside the app. But on the mobile side, I think it's as Asia, as Europe and the US, it's like a developed country. So there are credit cards, there are landlines. But in Asia, in India, in China, we leapfrog into the mobile age. So our mobile app is much more powerful as WeChat. But the more important thing is for the TikTok, as you know, is literally it's a Chinese company, but it's taking over the US market as from the new generation. That's something. It's a new phenomenon. It's a mobile age coming. The Asian software maker has some level of advantages. But this is just one stage. I think the next stage, as we see, is the IoT device. I think the number of IoT devices will be 10 times more than mobile device. And the amount of data that we collected and analyzed will be 10 times, 100 times more. So this is a new opportunity. I think at this time, the US, Europe, and Asia will have a similar starting point. Who will be the major player is still difficult to tell. But on the mobile side, clearly the Asia has some advantages because of the massive adoption of a mobile phone. On the China side, of course, there's a data collection which is much more quicker due to the regulation or whatever reasons. Because in Europe, there's a lot of privacy concern. Different groups have different ideas. But in China, if the government says okay, then go ahead, get all the data you want. With IoT coming, I think the things will be very different. So which country will get ahead is difficult to tell for now. But this is the opportunity for us as investors to identify those good companies, not only in US, but also in China, including China, in Asia, including China and India and Vietnam as well. So this is something I'm very excited and looking forward to those opportunities.
Good. Sethi, I know you had a point about some of those, the impacts of remote work as well. Be great.
Yes. So I'll actually use Larry's example of a video communication tool. And I think there's sort of, at least three stages of maturity of product team. There's like stage one, which is the Microsoft Teams, Skype. It's like, I have this idea and I'm going to build it because I think it's cool, right? So you get Skype, it takes off, it's amazing. And now it turned into Microsoft Teams. Then you have sort of, that's the, I would say, relatively immature product team, which is sort of a, I have an idea, I'm going to build it, and maybe it works, maybe it doesn't. The second stage is more like Google Meet, which is I want to measure everything my customers or users do. So I'm going to, define my goal metric, put everything into a funnel, optimize my conversion, do A/B testing. So it's like all data. And with that, you get something like Google Meet. It's optimized for data. But if you do just that, you basically get into, kind of tunnel vision and very much diminishing returns. And so you have to, I often say you have to think outside the funnel, right? And that's really Zoom. And Zoom is saying like, hey, it's a very crowded market. There's lots of work that has been done. And I need to be able to be very data driven, but also pretend like there is no funnel. So what is something that's going to actually gain me market share? If I'm looking at the success of something like Zoom, of course, there's the amazing video compression, but against the odds of infinite distribution and free or freemium products, a lot of it I think has to do with your understanding human nature, right? Like Zoom was the first service that put you right on the camera just with everybody else, and so you get to look at yourself all day. And I think that's like a key driver of the success of the company, which is a customer insight that goes way beyond just looking at the data. And that's what I think of product teams as opposed product management teams, as opposed to say project management teams that you'll find at a Google or something like that. So how that relates to our pandemic, we've a lot of the Gen 1, right, the kind of star system product teams have had to move to the data-driven product team. They've had to get organized. They've had to look more at data because they don't have that informal, let's do this, let's go right, let's go left because we feel like it. They just have to look at the data. So there's been a massive increase in productivity, but with that increase in productivity, we're kind of taking ourselves a little bit away from the ability to go into third generation, which is now let's think outside the funnel. And we have to, if we want to move past that, we have to find ways to think outside the funnel, recreate some of that creativity while being all in our own environment.
I have muted myself this time. Unfortunately, we are almost at time. So just a kind of final question, riffing off this idea that we are all going to be remote. Sethi, how does that impact the way you are looking at products that count in your Moatti Capital and its interaction with like this different region in Asia? And similarly, Arjun, I know the tribe has obviously been investing in Asia more broadly, but is also in the process of rolling out First Look that will allow qualified individuals with above a certain income threshold to co-invest in startup deals. Are you thinking of that as a platform that will also invest in Asia? And Larry, another question for you is, as we understand that you're in the process of kind of raising a fund, how does this crisis, remote work, change in any way at all your involvement or interactions with the Asian ecosystem? And just like a final line from you, again, Arjun, perhaps we can start with you, and then Sethi, and finally Larry would be great. Arjun, you're on mute.
So two pieces. I'm forgetting who the quote was by. I think it was William Gibson, where he said like the future is already here, but it's not evenly distributed. If you take that framework and say, okay, where does that exist? The people talk about remote work. I think remote work, in my opinion, I say this internally very often, is like the incremental MBA perspective, which is when you're trying to create and innovate, it's really, really hard when you're not in the same place. And there's a reason why a lot of companies, the microcosms of events and innovation, there's ecosystems that emerge next to each other, is because they are next to each other. And when you finally have something that works, let's call it going from 0 to 1, now you have a product that works, and now you just need to kind of drive, regardless of what the framework is to make it successful, you need to drive incremental innovation and change to that product. It becomes at a different phase of its life cycle. Then all of these things start making sense, which is like, should I work from home? Should I work in a remote location? And how do I would say, drive that redundancy towards growth? It's a very different perspective. That's one. The way in which we think about our platform and how we're thinking about our continued investments across the ecosystem. Yes, we have a product called First Look, where we invest and take on capital and co-investments from other investors that are accredited. But a lot of it is strategic. So it's like reducing the friction of how investors view the private markets. So most of it is, I'd say, black box and magic, for most folks, which is like, how do you make a decision for investing? And so a lot of what we've done is said, look, we have our bottoms up view, we ingest raw data, we store that, we retrieve it, we analyze it, and then we give that access to everybody across, from a founder who takes a look at that artifact to an LP who's want to take a look at that artifact. What that allows them to do is communicate at the same level around what is most important for the company. So we facilitate that. And if you really think about our job as venture capitalists, is to reduce that friction to be able to create that innovation and growth for our companies. So First Look, as a program, as you had asked, is to be able to do that all over the world, not too dissimilar to what we do for our core flagship and franchise products.
Great. Sethi.
Yeah, so for us, where we invest is where products that count as a network is strongest and therefore can add most value to our portfolio companies. And so what we've seen over the last year is, complete globalization of the network. We used to be extremely focused, say like Silicon Valley and then New York area are the really strong footholds of products that count. Seattle, Austin, Toronto, kind of, basically the coasts are where we can add the most value. And now we're looking at, across the US, and our fund's not set up to do international investment, but the next one will be. And we believe that by then there will be opportunities for products that count to add very material value to our portfolio companies. And so that's the first big change, which is like sped up the globalization of our investment thesis. And then the second big change is, what are the ways that we adjust our due diligence to be able to, and portfolio management, to be able to evaluate companies and then support companies that we invest in, even though we might not be just around the corner. So that's something that, we've accomplished successfully. We've made a number of investments since COVID, in fact, quite a few investments. But we're still, honing that and improving that.
Great. And Larry, I'll leave the last words to you before we wrap up.
Okay, well, you saved the best for last. Just kidding. Yeah, so actually it has huge impact on us. So we are changing inside out. What I mean by inside out is we are actually an entrepreneur as well. So when this crisis, the COVID-19 comes, we change a lot. We become very adaptive, very resilient. One thing we do is we have a geographically distributed team. During this time, we actually build an internal CRM system for VCs. Right now, we are using them for ourselves, but it potentially could become a product for every other VCs. So we are doing everything online. We're recording all the meetings, all the notes, and the voting system, and all the investment terms. Everything's in the system. So it's very easy to use. We have a search, we have a conversation recording, all kinds of things. So this is internally, we build such a system to make us work very productively while we are distributed. Secondly, to reach out to all the entrepreneurs and the LPs and all the partners, actually we started to work online. I just used the TikTok So I have two TikToks. One is the version for China. One is the version for China, for version outside China. Amazingly or accidentally, I become I become a influencer in TikTok. Now I have like 125,000 followers in TikTok in China. So every week, every Saturday morning, I gave a live talk, and there are like about 3,000 or 4,000 people listening online. So through this kind of pandemic, I end up become an influencer online. I never realized, but I'm some kind of 50-year-old person. I become an influencer, and with so many followers, and actually many of them are entrepreneurs or the CEOs of the portfolio company we invested. Some of them are our LPs from Asia. They actually using this platform to communicate with me, with our team. It's also built the morale. So it's a morale booster for the entire team. And they feel like, this working with AMINO is kind of interesting because one of the partners become an influencer on internet, and they can proudly talk about it. I work for AMINO because you can look at these TikTok shows. So it's becoming a hit. So in a sense, this crisis brings us an opportunity. So, but I think some of the trends will diminish with as we overcome the problem with COVID-19. But some of them will stay, like the telecommunication, the influencing we have online will stay. And this is something we are very proud and we are very excited. And I also want to work more with the colleague in Asia, with the people here, the panelists, because there are a lot more opportunities that we can collaborate. With doing due diligence online, sometimes more difficult because you don't see the person. I would be very happy to collaborate with other investors to see the person, the team from different perspectives. This gave us opportunities to work together. Also, I thanks to this panelism, this panel and this Deal Street Asia as a good platform for us to collaborate.
Thank you so much. We've completely overshot time actually, and we still have more questions to ask, which speaks volumes of how interesting all the panelists and their thoughts were. So thank you so much for taking the time this morning to speak with us. And Larry, we'll have to go check out your TikTok now. I'm very interested. It's definitely a platform that I should be using more and probably don't use as much, except to watch a lot of the TikTok videos. Thank you once again for taking the time this morning. It was great chatting with you.
Thanks for having us.
Great to meet everybody. Thank you.
Thank you very much.
Thank you.